Hello and welcome to NDTV Profit. You're joining us in a special broadcast where we're actually standing at CITI India's Bandra Kurla Complex office. And here, we're going to try and understand how a foreign bank in India, which has been here for a very, very long time, by the way, but how that bank is looking at the growing India story, the developments in the banking sector, and the broader economy. And to discuss this and more, I have with me Mr. Balasubramanian, the CEO of the India business for CITI. But I just wanted to take a view about what exactly you see as the India promise. How does CITI define the India promise?
You know, I like the fact that you mentioned the foreign bank in India. Let me tell you, in 2027, we are actually going to celebrate 125 years of our existence in the country.
125.
Absolutely. So it cannot be more local than local. Right? So we've been here, and as you can imagine, most of our talent is like, homegrown, locally, grown in terms of everything that happens. So we are as local as what you can think about. Now, I just moved back to this role a little over 6 months, and if you ask me, when I got the call for this role, it was frankly a no-brainer for me because the opportunity that India provides as a country, as an economy, is just phenomenal. And it's a young population. We all talk about the positive demographics, increasing per capita income, proactive government. And the good thing is, when stability is a big question mark across the world, at least we are having a government for the third successive terms, which brings in actually policy consistency and stability. All these are basically positive framework for continuing growth, and which is exactly what we have seen in the last 2 quarters print. So CITI actually believes in India in a very, very big way. We have invested tremendously in the country. We've got more than 34,000 people working in our shared service center, which is the GCC is what it's called. And we've got close to 2,000 people working in the bank. And pretty much we've become a wholesale bank post the retail exit that happened 2 years back. And in every constituency of the wholesale bank, I think we have a very, very strong and market-leading practice. So we are super invested and excited about the opportunity in India.
Let me also ask you a quick question about how you view the conversation around India right now on a global stage, right? When you're talking about India, we're all talking about a high growth economy, probably the only challenger to China. But to your mind, what is actually the best thing about the Indian economy?
See, frankly, if you ask me, there are 3 broad themes that is playing out in the country. The financialization of savings. This is something that we've been talking about in India at least for the last 15 odd years, because traditionally India was more about real assets and like gold and real estate. But then during COVID, things started changing fundamentally. And if you look at the amount of investments that is going to come into the capital market, that's been just phenomenal in the last 5+ years. And let me give you a stat, right? For the first time in the last 20+ years, the DII holdings, which is the domestic institutional holdings in the Indian capital market, is more than the foreign institutional holding, right? And if you look at the top 500 listed company in the Indian stock market, I think the FII holding actually has been coming down quite substantially in the last 12 odd months. And frankly, the market has been pretty much range bound or is moving on the right upward trajectory. That's only because the local money is coming in. So that's a big theme that is playing out in the country. The second theme that is playing out in the country is the investments. And government has been front-loading a lot of investments. And if you look at not only the top 3, 4, 5 cities in the country, but across the top 20, 25 cities, there is a massive amount of infrastructure spend that is happening, which is all accelerating in terms of the income levels for various people, right? So I think that's a continuing theme that is actually going to play out at least for the next 5 years. And if you think about the government's plan of making India a developed country by 2047, the Viksit Bharat that the Prime Minister fondly talks about, we are talking about something like $3 to $4 trillion of investments to be made in India over the next 5 years across multiple classes of assets. And if you think about the domestic capital or savings rate, that's actually not enough to take care of this massive investment. So there is a reliance on foreign capital. And I think banks like us and any other multinational banks actually have a very good play there, because we have access to foreign capital, both on the FDI, which is the manufacturing or the foreign direct investment, and also the portfolio investment through the FII, private equity, sovereign wealth fund, et cetera. And I think this is going to be a continuing theme that is going to continue to play in this country. The last thing that I will talk about is integration of India into the global supply chain.
Yeah.
We have seen pockets of excellence, pockets of brilliance. Like electronics is a very, very positive thing that has happened all in the last 5 years. Auto ecosystem has been quite well developed. IT ecosystem is quite well developed. GCC, which is it sans industry, and pretty much more than 50% of global GCCs are present in the country, and we are looking at an addition of around 150 odd GCCs every single year.
150 odd GCCs.
Yeah,
wow.
and our view is that between now and 2030, by the turn of the decade, we potentially will have more than 70-75% of the GCCs present in India.
Okay.
And these guys are not, today the GCC is not basically being looked at from a cost arbitrage perspective. They are doing cutting edge work. They are basically doing CAD, CAM, designing, artificial intelligence, machine learning, etc. So the quality of work that is being done in the GCC is very different to what typically we were used to in the past. So I think India is integrating more and more into the global supply chain. And my sense is that this potentially will only keep increasing as I look at the next few years.
All right. I want to take these three topics, and I like what you said about the infrastructure. So let's take a seat at the other window. I like what you said about the infrastructure bit, and I really like this view. So I wanted to get this as part of our conversation. We've got a few planes taking off behind us.
And you actually missed out one other important thing. Right down there is the high-speed train that is coming up.
Oh, right, of course.
Between here to Ahmedabad.
Right.
And hopefully, this is actually going to be
signs of the time that are coming
Absolutely.
in. Okay, let me come to that infrastructure conversation, because there's a lot of reliance that the government is placing on developing infra in India and the kind of growth potential it has, multiplier effect it has. But for a developing economy, what else do you look at apart from infrastructure? What else are the key sort of development areas or investment areas according to you?
Climate transition is a big thing that is playing in the country.
Okay.
And frankly, if you ask me, for a country like India, it is no more a hobby to do climate transition. Okay. Because India is actually going to be one country which is going to get impacted quite significantly in everything that is happening on the climate side, right? And the focus on renewable energy is actually real. There is massive amount of capital investment that is happening in terms of renewable energy technologies. And I think this is going to be a continuing theme that is going to play out at least for the next 4 or 5 years.
Okay.
The second is electric vehicles and automation. And again, the adoption of EV in two-wheelers and three-wheelers is actually going to be much faster, as we are already seeing.
Sure.
And it is a question of time before it moves into the four-wheeler, i.e. the passenger vehicles. So that again is going to be a big theme. If you talk to any large conglomerates, one thing that is very, very critical is that we see a lot of them investing in battery capabilities.
Right.
Both on the chemistry part as well as in terms of the product and designing. And the question then is for a country like India, which is quite large, the size and scale becomes quite relevant. And as long as you're able to create a product which can deliver you a solution at an optimally effective cost, I think there is always going to be a taker. And I think there is tremendous amount of work that is happening in terms of trying to bring down the cost on the battery savings technology. And it's a question of time before all these things will actually start playing out to find a solution which is actually going to be quite palatable to the country, both on renewable energy as well as on automotive electrification of automotive.
So that's infrastructure, clean energy, electric mobility. What about the services part of the story? Because a lot of this is still very close to manufacturing and development in India. But services are also kicking off. The GCC point that you mentioned is a sign of that. India is becoming that service hub as well. How do you see that evolving? Because that's linked to my next question on financial services. I'll come to that.
Yeah, services, I think the concept of GCC again came in only in the last 5 or 6 years. And today, and earlier GCC was more prevalent in the financial services space. But today, frankly, if you think about it, even the industrial companies are having their back office GCC in India. And these guys basically help in developing the design technology. They help in developing in terms of how they can make things much more efficiently and from a cost optimization perspective, and all these things are happening in India. The current size of the industry is approximately $65 billion, and this is likely to expand to around close to $100 billion by the turn of the decade. And it employs massive amount of talent, which is pretty good for a country like India.
Yeah.
And potentially this could be the next big industry which is actually going to absorb the human resources that is going to come into the mainstream work over the next at least 5 years or so. So GCC is going to be a continuing theme that is actually going to play out. As I said, we have 50% of the total GCCs operating, and this is likely to go up to 70% by the turn of the decade.
70% by the turn of the decade.
Yeah.
So tell me this about financial services, because as the preeminent name for foreign capital, foreign investment in India's financial services ecosystem, there's a lot of interest now. You've got lenders from Japan, you've got lenders from the Middle East coming and viewing India as an investment opportunity. Some of them want to take control and run banks here. How do you view this? Because we saw some interest maybe a few decades ago, but since then things have been pretty quiet. I mean, guys who came in at the time when you got in about a century ago, or a little bit more than that, they are still continuing. The new guys who came in maybe just started rep offices and then moved on. But now there's a keen interest on taking over India's financial services ecosystem. How do you view that?
See, the reason why there is so much of excitement at the financial services is because if the economy is growing at around 7.5–8%,
yeah,
I think the financial services has to go at least 2 times, if not more, right? So it's a given that between 15 and 17 times 17% is the growth rate for this industry. Tell me, which other country with such a large base has the growth potential which is in the high teens, right? So no wonder that there is a lot of attraction that is coming in.
Yeah.
If you look at the valuation of this sector, frankly, the financial services sector is still available at fairly moderate price. It's not as expensive as some of the other sector. So that again is there is a lot of interest. And if you think about the penetration of organized formal financial services in the country, there is still a lot of work that needs to be done, right? So combination of these 3 things is basically resulting in a lot of interest coming into the sector. One thing I had to give you, and many of us who have been in India for a long time know, India is not a place where you can make quick money. You need to have products which are tailor-made for the market.
Yeah.
You need to have the right price points for all of your product, and you need to have a distribution reach which will basically have a combination of en masse as well as the top tier that you're looking at. Once you have this strategy stitched up, I think there is tremendous amount of opportunity that you can look at for making money in the country. And we are seeing a lot of interest coming in from Japanese, as you talked about. We were involved in a couple of situations with Japanese. We've seen money coming in from Middle East. Again, we have been involved in a situation with Middle East. And we keep getting a lot of inbound queries coming in from many of the country's investors to try and see in terms of the future of financial services in the country and what are the opportunities for growth in India.
How do you view the competition that is coming from your domestic cohort? You've got private banks which over the last 40 years, to be fair, have done very well. They've really established themselves as a decent, I wouldn't say last 40 years, maybe last 30 years, they've actually grown quite well. How do you view that competition? Does it, like for example, things like investment banking or things like transaction banking, do they pose real challenges for a foreign bank like yourself?
I think you need private sector banks, you need government-owned banks, and you also need international banks operating in any country. And frankly, that's a model that is there in every large market around the world. Now, if you think about it, I think there was an opportunity for some banks to come in and try to offer world-class product at very, very attractive price and cover en masse, not only the creme of the population. And I think that's an opportunity that opened up since late 1990s.
Late 90s, yeah.
And private sector bank did phenomenally well in terms of investing in technology, building the product sets, getting the right talent to sell those products, and try to build their business case. And I think that will continue to play out.
Okay.
Government banks have their own opportunities in terms of what they're focused on, and I think that is going to be a continuing thing. The international bank, there is a clear space because as long as you need you see clients becoming more sophisticated where there is a need for sophisticated products.
Yeah.
I think success transfer for international banks become very natural. Mediating foreign capital, as I mentioned, is the domain of an international bank, and I think that is going to be a continuing theme that is going to play in this country. And then if you look at some of the product verticals that you talked about investment banking, I think we do exceptionally well because one, we know the investors who have the pockets of liquidity who are looking at opportunity to deploy in high growth and high paying markets, and I think naturally we are the best advisor for them. The second thing that we are seeing is the valuation for growth that we are getting in India is just very, very attractive. So a lot of foreigners, as you have seen in the last 24 months, and more so the discussions that we are having with global companies, trying to try and see whether they can list their domestic operations in India, because the value that they get for these businesses are quite materially constructive, and they have a very good business case in India that basically gives them the dry powder to try and see in terms of how they can look to grow organic or inorganic.
We've seen the South Korean giants come in, of course, to come and list the business.
We saw the South Korean giants. We saw a Nordic company coming in, Okla, coming and listing in India. There, Tenneco, which again is a US company which got listed in India. And if you look at the valuation multiple that they're getting in the domestic market versus the parent, I think there is a reason why there is so much of excitement. And clearly international banks will always have this business. You talked about digitization. I think despite we being a foreign bank, we have close to 4% share of the digital ecosystem in the country, right? We provide cutting edge products to our corporate clients. We also do B2C from a corporate client perspective. And there is tremendous amount of money that we are investing in technology to build our product capabilities even more. So I think there is significant amount of investments that is happening, and there is significant amount of opportunity that we foresee in this country over the next several years.
I've got one more general India question, and then I'll come to city specific. But when you're talking to a lot of these foreign investors who are looking at India, the India opportunity and the India promise, directing their fundamental money into the markets here, do you see now the recent outflow of foreign capital concerning at all, or is this just what happens every year? It's just part of running a market.
So I think what has happened is 2024 was an election year. And then we had a little bit of an erratic rainfall, some months being very good and some months being very soft. The growth was, and then the government capex spend was a little low. Combination of these 3-4 items resulted in growth being a little tepid. And in parallel, and the markets were quite expensive at that point in time. And in parallel, the opportunities in some of the other Asian markets was very attractive, and we saw money moving from India to some of the other markets. But then frankly, if you ask me, these are trends that we see in any global capital market allocation by any of these big firms. So they are always looking at pockets of opportunity and pockets of areas where they can make money. And clearly some of the other markets were more attractive than India. But then if you think about the way the IPO market has opened up into 2024, all the way into 2025, I mean, we see a lot of participation coming in from international investors into those markets. So it's only a question of time before, I see the foreign money will come back into the country. So we're not really very worried about it.
Is the domestic demand big enough to grab whatever the foreign guys are looking to sell?
Absolutely, because if you think about it, the number of new companies that is getting listed in the country is in 250 to 300 last year, and again the same thing is happening this year. That is something like 4 to 5% of BSE new companies getting listed every single year. And this trend at least is going to continue into 2026. Who knows beyond that, right? So there is and the startup ecosystem in India is the third largest globally, behind US and China. And today the startup ecosystem is across industries. It's not restricted only to financial services. There are so many startups and new age businesses and some of those mature businesses and consumer facing businesses. So my sense is this is potentially going to be a continuing feeder for newer companies to come into the market, and that will look at accessing capital both from domestics as well as from foreign.
Talking about your India presence now, you did rationalize some part of your business in India a few years ago.
We just sold the retail business.
Yes, exactly. We'll say it. Okay, but what's your experience been since then? Because Citi was widely known as the bank that brought in, let's say, net banking to India, which was not something that people knew a lot about before. You've also been the sort of reservoir of talent in retail banking that a lot of other private banks have gone dip into because they want to develop the business. But what has the experience been over the last few years?
See, I think this was part of a global decision that our CEO took when she became the CEO of the bank.
Yeah.
And India was basically part of more than 16 odd markets where CITI decided to exit retail and focus only in the home market for retail and some of the wealth hubs like London, Dubai, Singapore, and Hong Kong. Now, it's been a little over 2 years since we exited consumer. 2023 March is when we exited consumer. And our top line, which is revenues, have basically grown by 40% today versus the combined top line that we had across corporate and retail.
Oh.
Our profitability today is approximately 30% plus over the combined profitability that we had across retail and corporate.
Right.
The reason why I'm giving you these stats is because we are doubling down on each of the business segment. And broadly, if I think about it, we talked about investment banking. I think that continues to be very, very strong. We are amongst the top two in both equity capital markets and M&A. And we've been pretty much involved in every single large transaction that has happened in the country. And if I look at the pipeline for the next 6 months, assuming market continues to be constructive, I would assume that we would continue to be in the same position as we were in the past. So that's on IB. If you look at the custody business, right? We have something like 35% market share in the custody business, right? And we work extensively with regulators. We work extensively with investors across the world, trying to basically sell India to them. And there have been big successes that we have had in the last 2 years. If we look at the FDI, which we cover it through the MNC banking, we've got upwards of around 22-23% market share in that space. Again, the US-India corridor, we are very, very active. The traditional Europe-India corridor also, we have a very reasonable market share. And then the growth area is the Asia to Asia. And we are seeing Taiwan-India corridor being extremely active since the last 3 years. Korea-India corridor continues to be quite active on the consumer and automotive side. And Japan-India corridor is more on the infrastructure side. So these are all emerging corridors that is there. And then Middle Eastern investors are looking at India more from a capital investment perspective as well as inorganic opportunities in the country. So I think this is all something that we are doubling down. On the transaction banking space that you talked about, we actually have very significant market share on trade, both imports and exports. And we have launched a variety of structured financing for our corporate clients, which are highly valuable to them because these products basically help them access capital at very, very attractive rates, and it provides solutions which help them from a balance sheet management perspective. Other digitization is something that is a foray. We continue to invest a lot in technology. We have a significant share in terms of some of those new age capabilities on digital payments, and I think this is a big thrust area for us.
You talked about the trade corridor. Now with the way the tariffs.
Sorry, I just need to also talk about markets.
Yes.
The risk management.
Sure.
Because that's a big focus area for us.
Sure.
We are actually building our securitization book. I've been very vocal about it. We are looking at commercial real estate in a very material way. We are actually looking at emerging market credit in a substantial way, which is basically private credit. And then on specific situations, we are helping promoters and founders to basically try and see in terms of how we can provide capital solutions, either for stake increase or looking at acquisitions of Indian companies and stuff like that.
Do you believe that the securitization market in India is mature now?
Because it's very nascent, actually. If you ask
that's the reason why I brought this up.
If you ask me, the asset classes that get securitized in India is highly concentrated.
Yes.
The number of clients who are available from a securitization pool perspective is very limited. But then what I like about the space is that these numbers are increasing at a very exponential base, and I would expect that this is actually going to become more and more deeper as I look at the next few years.
Great. Tell me a little bit about the impact of the tariffs on your business as well as the clients that you serve, because you do control a lot of the business around the trade transactions, exports and imports, as you said. how are people still a bit petrified of these tariffs, or is this now business as usual?
I think the government is also doing a hell of a lot of stuff in terms of trying to manage the problem that some corporates are facing.
Yeah.
Now this is very, very concentrated to the SME and MME business in certain sectors which are heavily exposed to the US markets. Overnight, it's not possible for you to shift from one market to another.
Correct.
So there is a lot of support and work that is happening with the government in terms of trying to provide opportunities for some of these companies and entrepreneurs to look at alternate markets. I don't think it is a big concern or an issue, but then clearly you have to figure out a way in which you need to manage exposures and sectors which are getting impacted to basically look at alternate markets and try and channel those products into those markets. So it's still what WIP, it's been hardly 3 months that we have been impacted with this high tariff, and my hope and prayer is that we will probably find a solution sooner than later.
Super. I want to ask you a couple of more questions, and this is regulatory driven, because there's that piece is very. I mean, one could say it's a market risk, but I would say it's an important component in the entire market in India, which is the regulatory landscape that we operate in. As a lender, as well as a facilitator, do you see that the regulatory landscape has become significantly more conducive to new business ideas?
Yeah, I think clearly in the last, ever since I think calendar 2025, we're seeing a lot of constructive engagement with regulators, both on the capital market side as well as on the lending side. And I think clearly growth is a priority. Regulators also understand that there is a cost of regulation, and they're basically trying to see in terms of within the guardrails that is there, how they will allow the banks to provide growth opportunity as well as freedom to explore what is possible. So clearly I think it is very, very constructive the way I see it in the last 9 odd months.
Lastly, on the government policy front, now, earlier you mentioned about various things which are growth focused, right? But is this 8% growth, which is what we saw in the first half of this financial year, is this enough to push India into that category of the nearly developed nations?
I think so, because if you think about it, the accelerator will come in if you continue to grow at around 8%. It's only been 2 quarters that we are seeing close to that level. And already there is a lot of positive buoyancy that we hear from our clients. We see a lot of positivity in terms of investors looking at India from a growth perspective. And as long as there is no negative headwind that comes and hits us, my sense is this is a very, very strong start. And if we continue to roll like this for the next few quarters, I think the momentum is actually going to take us to the next level. Right. So I'm actually very bullish on India.
Super bullish on India then. All right. Thank you so much, Bala, for joining us on this conversation.
Thanks, Rishi.
It's a pleasure talking.
Pleasure. Thank you.